Hello everyone. In this class, I am going to continue the topic of how to pass journal entries under GST. In the last class, we learned about journal entries that are related to purchases and sales. Please go through that class and then watch this one. I will give the link in the description box. Now we will see the journal entry for expenses. Under this first case, that is under intrastate transactions. So the entry is expenses account debtor, input CGST account debtor, input SGST account debtor to cash or bank account. This is the journal entry related to intrastate transactions. Now we will see the second case, that is under interstate transactions. So the entry is expenses account debtor, input IGST account debtor to cash or bank or creditors account. So this entry that is related to interstate transaction. Now I will explain these journal entries through one example. See here. Example for intrastate transactions. You pay office rent of rupees 50,000 with 18% GST. In this question they have given that is 9% CGST plus 9% SGST. Means what? Here CGST and SGST they have given in the question, but they have not given any information about IGST. Means what? This question that is related to intrastate transactions. Now we will write down the journal entry, that is rent expenses account debtor, input CGST account debtor, input SGST account debtor to cash account. First we have to write the rent expenses, that is rupees 50,000. Next one, input CGST and SGST. First 50,000 rent on GST, that is 18%. 50,000 into 18%, that is rupees 9,000. Now what is the next step? 9,000 we have to equally share between the state government and the central government. Now 9,000 into 50% and 9,000 into 50%, that is rupees 4,500. 9,000 into 50%. 4,500 goes to the central government and 4,500 that goes to the state government. In this question, we can calculate this input CGST and SGST like this also. See here, in the question, they have given 9% CGST and 9% SGST. So, rent amount that is rupees 50,000 into 9% means, see here, 4,500 that goes to central government and 9% SGST means 50,000 into 9% that goes to the state government. In this way also we can calculate the GST. Okay, I hope this example is clear to you all. Now we will move to the next example, that is related to interstate transaction. See, in the example they have given the IGST rate, means the question that is related to interstate transactions. Now we will see the example. Company incurs rupees 50,000 for professional services from an interstate vendor and IGST charged 18%. Entry is professional service expenses account debtor, input IGST account debtor to cash account. Expenses value 50,000 and input IGST account means 50,000 into 18%, that is rupees 9,000. That is rupees 9,000. So credit balance that is 50,000 plus 9,000, that is rupees 59,000. Okay, I hope this example is clear to you all. Now we will move to the next transaction, that is related to how to pass the journal entries when payment of GST to the government. Payment of GST to the government. How to pass the journal entry for payment of GST to the government. See here, when GST liability that is paid to the government, the journal entry is output CGST account debtor, output SGST account debtor, output IGST account debtor, to input CGST account, to input SGST account, and to input IGST account, and to bank account. See here, when you pay the GST to the government, the journal entry depends on whether you are using the input tax credit to offset your GST liability or paying the full amount in cash. In this case, we are using the input tax credit. Okay, now we have to learn what is input tax credit. Before learning the input tax credit, I will tell you some important points about output GST and input GST. See here, output GST collected on sales which increases the liability. When we will collect the output GST on sales, it means what? Business, it will collect the GST on sales from the customer. Means when the business sold the goods or services to the customer, business only collects the GST from the customers. And next they are telling which increases the liability. It means what? See here, when business collects the GST from the customer, whether it belongs to the business or not? No, it not belongs to the business. Why? Because business has to pay that GST amount to whom? The business has to pay the GST amount to the government. Okay, so which increases the liability. Remember, output GST collected on sales which increases the liability. And second point is input GST is paid on purchases which decreases the liability. Means it is an asset. When we will give the GST, input GST on purchases which decreases the liability. Means what? Supplier charges the GST here. Means business has to pay the GST to the supplier. Here supplier collects the GST. Okay, means when the business purchases the goods and services, input GST that is payable by the business. Fine. So here this input GST that is paid on purchases, that is used to set off the output GST liability that is collected on sales, and the net difference that is payable to the government. This is called as input tax credit. Here whatever we have paid the GST on purchases to the supplier, that GST we will use to set off the output GST that one business has to pay to the central government. We can use this input GST to set off the output GST and the net difference that has to pay to the government. Fine, this is about input tax credit. See now, input tax credit. Input tax credit, it allows businesses to recover the tax they pay on goods and services purchased for use in their business operations. It means what? Input GST that is paid on purchases is used to set off the output GST liability. Okay, now we will see how input tax credit works. First, we have to calculate the GST on purchase. That is input GST. Means when a business purchases goods or services, it pays GST to the supplier. This is called as input GST. It means what? When business purchases goods and services from the supplier, business has to pay the GST to the supplier. And GST on sales, that is output GST. It means what? When a business sold the goods or services, business collects the GST from the customer. This is called output GST. And third one is claiming input tax credit. See, the input GST is set off against the output GST. Means input GST is set off against the output GST, and the business only needs to pay the net difference to the government. Means here input GST is used to set off the output GST liability, and the business only needs to pay to the net difference to the government. Okay, this is about input tax credit. For better understanding, I will explain this input tax credit through one example. First one, example for purchase. See, business purchases raw material worth rupees 50,000. GST is 18%. For purchase, what is the journal entry under GST? That is raw material account debtor, input CGST account debtor, input SGST account debtor to cash account. Here raw material, value of raw material, that is rupees 50,000, and GST on raw material, that is 18%, means 50,000 into 18%, that is rupees 9,000. Now this 9,000 we have to equally share it between the central and state government. That is 9,000 into 50%, rupees 4,500 to the central government and 4,500 to the state government. See, here I will write down 9,000 into 50%. On, see, RM is raw material. See, 50,000 into 18%, that is equals to 9,000. This 9,000 equally shared between the CG, central government, and state government. Okay. Now what is the credit amount? That is 59,000. Okay. This is the journal entry that is related to purchase. Now second transaction, that is for sale. Business sells goods for rupees 1 lakh with an 18% GST rate, 9% CGST and 9% SGST. See here the entry for sales. Here we will write account receivables, or we can write customers account also, or we can write debtors account also. Account receivable, account debtor to sales account. We are business selling the goods to sales account. To for purchase input will come, and for sale output. Output CGST account to output SGST account. Okay. See, account receivable, that is rupees 1 lakh. Okay. Don't write now account receivable rupees 1 lakh. We will write down the amount for sales first. Rupees 1 lakh. And output CGST account. See here. 1 lakh into 18%. That is 18,000. Into, we have to equally share between the, this 18,000 we have to equally share it between the central and state government, that is into 50%. Otherwise we will calculate like this also, 1 lakh into 9% and 1 lakh into 9%. They have given the CGST and SGST rates. So here 9,000 and 9,000 means, see here, GST on sales 1 lakh into 18%, that is rupees 18,000, and you have to equally share it between the central and state government. %. So 1 lakh plus 9,000 plus 9,000 means 1 lakh 18,000. Account receivable account, that is rupees 1 lakh 18,000. means business, it will collects the amount of rupees 1,18,000 which is inclusive of GST. Means here GST, that is rupees 18,000. But this GST amount, that is rupees 18,000, out of 1 lakh, rupees 18,000 that we have to pay to the central government. This 19,000 or out of 1 lakh, rupees 18,000 that not belongs to the business. They have to pay to the government. So this is called as increase in liability. Fine. Now we have to identify the input tax credit here. Claiming input tax credit. See, the rule is the input GST. See here, the input GST is set off against the output GST. Here input GST, in this example, input GST is rupees 4,500, means input tax credit 4,500 and SGST 4,500. See, input CGST and input SGST, that is rupees 4,500, 4,500. Now we have to set off, means we have the input GST that is set off against the output GST, and the business only needs to pay the net difference to the government. In this example, see here, 18,000 rupees business has to pay to the central government. But here net GST payable to the government is net GST payable to the government is, the rule is we have to use the input GST that is set off against the output GST. Means output GST, that is rupees CGST, that is rupees 9,000, and our input tax credit, that is rupees 4,500. See here, 4,500. Net difference 4,500. And what about SGST? Output SGST 9,000 and input tax credit that is related to SGST 4,500. 4,500. See here, input CGST is used to set off the output CGST and SGST, and the net difference means 4,500 plus 4,500, that is equals to 9,000. This 9,000 is the total net GST that the business has to pay to the central government. See here, before 18,000 they have to pay to the central government, but in the question there is input tax credit. Here we have used the input tax credit, means input CGST account and input SGST account that is paid on purchases. We used to set off the output GST, means output CGST and output SGST account. So instead of rupees 18,000, we need to pay only rupees 9,000 to the central government. Now we will pass the entry. The entry is, see here, output CGST, output SGST and output IGST account data are here, but in our question here IGST is not there. Just we will write down, 1 minute, output CGST account data, output SGST account data, to input CGST account, to input SGST account, to bank or cash account. See here. Output CGST account data, output SGST account data, to input CGST account, to input SGST account and to bank account. Output CGST account. See, output CGST account, that is rupees 9,000. Rupees 9,000. Output SGST account. See here. Output SGST account, that is rupees 9,000. And input SGST. Input CGST and input SGST, that is rupees 4,500 and 4,500. Now bank account means the net GST that is payable to the government, that is 9,000 plus 9,000, 18,000. 4,500 plus 9,000 minus, so 18,000 minus 9,000. See here, 9,000. See here. Means debit and credit balances should be equal. 9,000 plus 9,000, 18,000, and here credit balance 4,500 plus 9,000, that is rupees 18,000. Here to bank account means 9,000 rupees. We means business has to pay this amount of GST, rupees 9,000 GST to the government. Fine. Okay, this is about the journal entries that are related to expenses and payment of GST to the government. I hope this example and the concept of input tax credit that is clear to you all. If not, please leave a comment. Thank you.